Hi everyone, welcome back to the 11th episode of the Learn, Invest, Grow show. I'm Tay and joining me here is my partner Adam. Hi Adam, it's always a pleasure to host this with you.
Same here. I love what we're doing. I love adding value to our investor community. And I want to make a point for legal reasons that this is all of our opinion. We do like to support things with facts, but what we're saying, especially in this topic when we're talking about individual people, what they say, this is our opinion that I want to put out there. I want to put that out there.
Yeah, thanks for putting it out there. Okay, without further ado, let's get to it. Today in this episode, we're gonna check out what Grant Cardone said, especially about single-family homes as an investment, and share our viewpoints. Right. So some of you may wonder, who is Grant Cardone? Yeah, he's actually very famous and venerable entrepreneur and real estate and sales mogul, and also a New York Times best-selling author, speaker, and yeah, great motivator. His company, Cardone Capital, is also known to own more than 8,000 multifamily units and $1.8 billion worth of assets under management. And no matter where he goes, he openly says buying a single family house to live in or as a rental property, whatever it is not a good investment at all. Although he made some a valid point to back up his argument, we don't agree with him to some extent. Having said that, why don't we check him out in one of his videos on single family versus multifamily and go right off into our personal opinions?
All right, here we go. Okay, let's play this thing. Here, this is, I love the board, by the way. Eventually we'll get one of those. Here we go.
1,500, or do you want 32 units to pay you half that? Let me tell you where you want to be when the economy crashes. When the economy crashes, folks, you do not want to be in this deal, no matter how good this deal is today. You do not want to be in a single door. You know why? Because they leave it. When the economy crashes, they're going to run out that front door. These people over here, they have no place to run to. Don't you run. Grant Cardone.
I love it when you said
I'm
that.
showing you how to create real wealth investing in real estate.
Creating real wealth. Okay, let's go into this. Yeah. Let's go in. So we're gonna fast forward to another segment. These are our talking points. Here we go. 14. Okay.
What I shared with you before the break. The number of doors in real estate is the single most important number in all of real estate. Give me the image. Full screen, just blast it up there, okay? One house at $1,500 a month. The maximum income on that deal is $1,500. 32 units at $800 a month. The maximum income, if all of them are rented, again, you're protecting yourself. You're diversifying with rooftops and square footage. Single family versus the multifamily. The number of roofs, the number of doors right here is what protects you in economic turndowns. We will have a turndown, folks. We will. The bigger I can scale.
Okay. Enough of this video. We're gonna dissect. There's a whole bunch that we could dissect. So there's a few things. Tay, I'll let you go into it first, and then I'll add on some light to.
Yeah. Oh, just so you know, I mean, we are not trying to answer which one is better, like a single family versus multifamily, because that question is kind of could be a little pointless because it all depends on different personal situation and investment philosophy. Rather, we like to focus more on here, pointing out kind of faulty logic in his arguments. So, like starting off the first video clip, right, we just saw, right? He said when the economy crashes, tenants in single family homes are leaving while multifamily tenants stay. Actually, like personally, I want to ask him how he's doing with some of his luxurious apartments. Do those tenants in class A or B stay there, like in spite of the economic contraction and financial hardship, or some of them are likely to kind of bump down to class B or C in order to tighten their belts? This is why we are heavily focused on affordable housing, regardless of single family or multifamily. and there's an ever-increasing demand for such a housing sector. But the big problem facing us is the lack of supply in workforce housing. So the bottom line here is that it's not about whether you own single family home or multifamily unit, but more about the affordability issue. What do you think, Adam?
100%. This is something that we've been discussing for some time before the pandemic. We're in the late innings of the real estate cycle, and we do not want to be in the top of the market, which is Class A luxury, because typically in a contraction, tenants will downsize. They're going to downsize to something to cut down on. They're going to downsize. I mean, it's just a normal thing to do. You got to cut down on your expenses. I mean, your cost of living. So they're going to go down to something that can meet their budget. And exactly what you mentioned, Tay. It's not whether if it's multifamily or single family. That's the reason why they're moving, is because of it's the affordability. So if you're in a luxury product, they're going to move down. And look, I was sold on Grant Cardone, just to let you guys know that I was sold on him. I read his book. I read the 10X Rule. I read Sold or Be Sold. I read his real estate investing book. And look, there's a lot of good stuff. And I even went to his Cardone, the Grant, the 10X Growth Conference back in February. Then I start watching videos like this, and I'm like, what is he talking about? It doesn't make any sense. You don't want to be in this asset right here. You don't want to be in a single family house when the economy crashes. Well, let me fact check this right now. Okay. First of all, let's go here, right? Wall Street investors bet on single family rentals as mortgage payments stack up, right? When was this article written? This was written recently, actually. It was written September 18th, okay? And what they're saying is basically Wall Street landlords, which emerged during the 2008 downturn, are prepared for windfalls as homeowners skip on mortgage payments, right? And look at this. I'll give you more, right? And this is something else here. Single-family rentals emerged as an asset class in the last recession. He's saying you don't want to be in a single-family home when the market contracts. Meanwhile, not here. Let's go back here. Single-family rentals emerged as an asset class in the last recession. Right? Now, let's go here. Gets even better. Okay? So, what's this? This is actually really recent. This just came out the other day, a few days ago, November 2nd. Single-family home rentals return, but with a twist. Right? So, what they're saying is institutional money managers are revisiting a successful strategy from the last financial crisis. Okay? They're investing in single-family homes. And, and this is a little bit of history, just in case if people don't know what happened. After the last downturn, financial firms like Blackstone and other real estate managers, they were buying up foreclosed homes. And they didn't just buy one. They were buying thousands. I mean, you have, was it Invitation Homes? They own like 80,000 homes.
Yeah, right. Yeah.
So it's doable. And here's another thing that's interesting. It actually debunks, it talks about something else, whereas, okay, these managers say that the single-family home rental market is evolving into an institutional investment, much as multifamily. Has Cardone read, or does he read up on current news, or is he just stuck in whatever's in his head? Does he actually read the news or read what's going on in the market? Because I get multifamily is a hot asset class, but right here, this is pension and investments. Okay, these managers say that the single-family home rental market is evolving into institutional investment, much as multifamily did more than 2 decades ago. And here's the kicker: institutional ownership remains a very small part of the overall single-family home market, with 200,000 homes of the more than 90 million single-family home units in the U.S. So meaning that there's a lot more up for the taking for the institutional investors and us little investors. And in fact, if we're a little investor and we're buying where the institutional investors are buying, what's going to happen? I would think it's going to help us follow the smart money, right? That's what I would do. And that's what we're doing, actually, Tay. We'll talk about that later on, what we're doing. We're already doing. We're already. So that's why we're in the trenches. We're already invested. We closed on 2 funds. First one was to buy 15 homes. Second one, we're buying approximately 50-something houses. You know, single family. I mean, 1 to 4 or 20 units or less, but we're staying to the small multi and single family market. And here's another thing. Tay, you want to touch on this at all? So I know.
Yeah, of course. Yeah. So I mean, we agree with him that the more doors you have, the more protection you can establish, right, against the potential adverse situations. However, yeah, as we mentioned, yeah, we'd like to really point out that his favorable argument for multifamily properties over single-family homes is really based on the premise that only multifamily can be scalable to enjoy the protection he's talking about. But as Adam really showing all the articles, single-family can be scalable like a multifamily.
Scalable.
So,
Look at this. Tech advantage. I'm already seeing it as a lender and as an investor ourselves. Is that look at Rockpoint Group? They considered this strategy a decade ago. Basically, they didn't think they could pull it off because of the technology, the capital markets. They didn't think it was tech. They didn't think it was. This is something they wanted to pursue. Now they've already seen it. It's already been proven, and things are improving for this asset class, right? So they're saying that technological advancements are also making this investment strategy more attractive, right? And now look at this. They just announced they formed a $250 million joint venture with ResiCap. And look at this. There's so much. We spent a lot of time looking through single-family homes for rent in 2009. And now, then they were just wondering, can they actually make this into an efficient business model? And basically, they saw technology was solving the problem where they could do this at a large scale. And what they're seeing is that single family provides a large opportunity than other niche real estate sectors, hence multifamily. Multifamily is saturated. I mean, this is what I believe, it's saturated. And there's a lot of single family homes you could buy. Look, Cardone's right. If you own one house, they'll live in. It's a liability. I agree with them. You have maintenance. You have to repair things. Can you offset that with income? Sure. I mean, you could house hack it. You could have tenants in there. There's Airbnb. And that's a whole other subject. But basically, for the point of this video is that he doesn't think that single family is a viable asset class when the economy retracts, and the smart money, who I would think is smarter than him, and they have professional, they do a lot of research before they do anything. They see that you can invest in scale, and they're taking the world's largest asset class and making it available to institutional investors. Hence, if you're a mom and pop investor, it may be a good idea to follow where they're investing, because that should help the values of where you're buying, because their goal is to improve neighborhoods so they can increase value. And then later on, obviously they'll have an exit strategy or, some type of strategy to eventually sell off a portfolio or hold as a REIT. And look at this. Institutional money managers have only scratched the surface. There's a lot of opportunity still.
A lot more potential down the road. Yeah.
And that's really it, So really, we have a lot more to talk about. We'll go into more stuff. And what we're doing too is we're having a webinar on November 18th at 7:30 p.m. Eastern Standard Time. Wow, what we want to discuss is why single family rental or SFR, single family residential for rent, is the next big thing. It's the next big thing in real estate. And we're investing in this. And the smart money, as you see, is investing. And we want to tell, don't listen to Cardone. Don't listen to him that buying a house is not a good idea. That's for suckers. He is wrong about that. Okay. In fact, we'll go into more. I don't want to put everything out here right now, but we're going to keep on fact checking. But I just want to show you, look, reset market contracts. They want to be in the single family homes. In fact, they don't want to just buy one. They want to buy thousands, and not just one company. There's many more coming into this asset class. Look at Rock Point. They missed out on the last recession. They see an opportunity, and they don't want to miss out. And there's plenty of others that are seeing the same market. The market sentiment. They want to be in it. Hey, anything else? I know we've been on here for some time.
Yeah. Before we go off, I mean, I'd like to mention that the Grant Cardone always like to challenge the old traditional idea in his videos. So do we, right? Mr. Cardone, with all due respect, would like to encourage you to think beyond the traditional concept of single-family homes. Yeah, just because it contains the word single doesn't mean that you own a single door at a time. So yeah, that's why I would like to mention in our video in response to his argument.
Look at this. If it doesn't cash flow, it doesn't cash flow if you live in it. What does he talk about? Has he ever heard of house hacking, where you could live and you could actually have roommates? How about Airbnb? I know people, and a good friend of mine, Northern New Jersey. It's a house, and he Airbnbs it, and it pays for his mortgage, and then he has a little left over for himself. And there's also, I mean, obviously there's supply and demand. I mean, it's a huge demand area where he's located, so it works. So location is the most important thing.
Yep.
I don't believe the amount of doors or roofs, the amount of doors. I don't believe that's the case. We'll debunk that later because, they do say you make your money on your purchase, not how many doors you own. I mean, you could overpay on 1 million doors. If you overpay and market turns, well, guess what? I don't think it's going to end well. So we'll talk about that later. I don't think that's the magic formula. It's the amount of units or doors. I don't think that's the magic number. And I know plenty of other investors that they just buy single family and they're doing very well. They flip, they buy, they hold. They have different strategies. That's a whole other thing. He bashes the flipper. Like, what are you talking about? Like builders. I mean, look at Toll Brothers. So these big companies, he's very biased, and I'm not. And the point of this episode is single family. We just showed you. He's saying it doesn't cash flow. If you live in it. That's false, as you know. He probably does. I hope he knows about Airbnb and that you can rent it out if you live in it. You want to have multiple doors to rent. That way, if 5 or 6 people leave, you still have 85% full. Yes, I get that. But what about if you have multiple houses? Similar, right? You got vacant, why does network marketing work? Because you're not dependent upon one person. Huh. This is the first time I'm reading this right now. Yeah, there's a lot of stupid stuff in here. All right, so that's it. Like, share, comment down below. We're gonna put the link for the webinar. We have a link for the blueprint, and that we're gonna do this again. Thank you.
Yeah, we greatly appreciate your inputs and feedback, and thanks for your time to tune in. Until next time, happy investing, everyone.